Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. Now, every Monday, we are joined by Steve Rhodes. Steve is the author of Mastering Probability newsletter. Again, a fantastic newsletter. Kind of gives you an overview of everything going on in the market. It is a great way to start the week and finish the week as well. Again, if you are a first-time subscriber to Mastering Probability, you can do this risk-free, right? If for whatever reason it doesn't work out, we're betting that it will. But you can get in, and we have a 30-day money-back guarantee for all first-time subscribers. I would strongly recommend checking it out because I think you're going to find out it is going to work very well for you. Steve, how are you doing?
Great, Jacob, yourself?
Doing well. Was your Thanksgiving good?
It was, and I saw with my own eyes on Thursday at about noon that Santa arrived. So appropriate for our discussion about the Santa Claus rally.
Absolutely.
And really just kind of a little bit of a focus on the Dow for the folks out there.
Sure.
So why don't we get into it?
I would love to.
And so what I've got up on my screen right now, what we're going to do today is, for the most part, take a look at the bigger picture of the market. But before we do that, in honor of Santa arriving at the Macy's parade on a Thursday and that pouring rain out there, the market typically, and I'll show some seasonal charts out here, but typically speaking, the Santa Claus rally begins towards the end of October. Sometimes it bleeds into November. Traditionally, I think people take a look at the Santa Claus rally as the week of Christmas, but then you would miss out on what typically is the largest rally of the year.
Yep.
So we take a look at doing around that October, November timeframe as we look for some bottoming patterns out here. And I have a daily chart up on my screen. This is the Dow Equity Future Contract. And one of the patterns that I teach subscribers, you hear it all the time, was a pattern that was created by Tom DeMark. And it's called the TD9 count. And now he uses that as a setup for something he refers to as TD combo or TD sequential. But I went ahead and programmed this onto my system and found that it provides us with amazing information. Helps us identify when likely turns are going to take place, where key levels, objective levels of support and resistance are. But in this case here, the actual TD9 count bottom for the Dow Equity Future Contract formed on November 4th. So I will use that as our point of reference. That's when really Santa Claus arrived inside of the markets, at least with regard to the Dow. Now, a couple days ago, this was back on the trading session of November 25th, as we were getting ready for last week. What the Dow Equity Future Contract did was it took out the swing point. The swing point, folks, this was a high that formed on November 11th. Market pulled back for about a week or so out there, and then we've taken off. Once we cleared that swing point, that triggered the A to B equals CD pattern. So there's a small A to B equals CD pattern. I don't have the exact price point, but figure 45,800-ish or so. That does not mean that's where price would stop. And we've been looking for some type of bearish reversal candle to confirm some type of top. So I just wanted to be able to share with people the fact that the Santa Claus rally basically has begun. At least that's what the daily chart is telling us. So since we ended the month on Friday, why don't we go take a look at what the monthly charts are communicating to us?
Fantastic.
And here what I've got for us, Jacob, is I've got 8 different monthly charts. And I'll just simply go through them one at a time here. We'll start with the Dow in the upper left-hand corner. The Dow had formed what I refer to as a Rhodes Momentum Indicator pattern, and it did that in October. It was immediately negated last month when price closed above that high. So the Dow itself, now we're looking at the cash indice versus the equity future contract. It has no top whatsoever. It took out the high that was in there. That suggests that we should continue, that the Santa Claus rally that we just took a look at, that began at the beginning of November out there, it's in full bloom, and we should continue to move higher. The S&P 500 also negated a pattern. It was the TD9 count on a monthly basis. It did that as we came into the end of the month on Friday. It too has no topping signals, and longer term suggests that we move higher. The only way that these signals would suggest that we don't move higher is if price were to close below that green squiggly line, what I refer to as the oscillator and change line. That's a natural level of support on any kind of retracement. You can see we're trading above that. When we trade above a green oscillator and change line, it tells us we have a rising price oscillator above zero. Folks, those conditions are just simply bullish, straight out, flat out. NASDAQ 100 negated its TD9 count top last month. The Russell 2000, which has been struggling, rallied right up into resistance. This is one of those lines that's developed with that TD9 count. It helps us to identify an objective level of resistance. That's at 2458. Now, if price is able to close above that on a monthly basis, then it's off to the upside for the Russell as well. The semis are the ones that are really, from a longer-term standpoint, the real fly in the financial ointment. They formed a TD9 count. You can see it was bar number 8 here. And it's basically been a sideways move over the last several months out here, but certainly not moving higher. And the markets would prefer that the semis are out in front leading a rally. They're not. If we take a look at the Dow Transports, they actually confirmed an A to B equals CD pattern to the upside. That should take it back to its all-time high. It was a Rhodes Momentum Indicator top, and that level's at the 18,246.51. This bodes well also for a further rally. The XAU, representing the miners out there, gold miners and so forth, what they did 2 months ago was they ran into resistance. That was a Rhodes Momentum Indicator top at 171.43. What transpired last month is price pulled all the way back to that green oscillator and change line, and that is held. So we've got a consolidation right now inside the XAU on a longer-term basis between support and resistance. And finally, New York Stock Exchange. New York Stock Exchange on Friday negated a TD9 count top, negated a Rhodes Momentum Indicator signal. So we take a look at the majority of these monthly charts. What they're communicating to you and I, Jacob, is that the markets longer term should move higher. I'm not worried about the daily or even the weekly time frames as far as the monthly is concerned, because that's just noise. So that's the message of the November monthly charts. The Dow today, actually, I know we're trading lower in terms of U.S. dollars. However, we made new all-time highs today in terms of euros, Aussie dollars, coronas, and Swiss francs out there. So this is telling us that the market wants to move higher, that we have a global rally that is underway inside of the Dow in basically the major currencies out there. And you'll see, for example, if you take a look at the euro, new all-time high today, 428.22 out there in terms of Aussie dollars and so forth. So the Dow is making new all-time highs today, even though it's not in U.S. dollars. It's doing it in other currencies. Here is that monthly horizontal trading range, vertical A to B equals CD pattern that we've got that gives us a price projection of 47,399, the 1.272 up at the 52,496 level out there. I remember sitting in the office with Tom many years ago, and I went through this longer term chart out there, and what it did was it gave us a price projection of 40,000. There's probably some listeners, Jacob, that were even on listening to that show out there, and amazingly, or not amazingly, we've already made that number, obviously. So if you want, we come back from this break, we can finish this up.
Yeah, Steve, absolutely. Folks, stay right there. We'll be right back with Steve Rhodes after this break. Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. You can find that in the newsletters tab of TFNN.com. He's also the host of the Trader's Edge Show right here on Tiger Financial News Network. You can catch that at 11 a.m. Eastern Time. Steve, before we went to the break, we were looking at potential movements in the Dow through December.
Yeah, well, really, here right now, the chart that we've got, this is a monthly chart, so it's giving us the bigger picture here.
Yep. Those
red vertical lines are what we refer to as horizontal trading ranges. And what's interesting about this is price will typically trade between them, and then it'll either bust one to the upside or the downside, and then you take a look at its next level. So 43,969 was a resistance area. If the Dow pulls back, as an example, look at the Dow's cash indice, that's where I would expect price to find support. Right around, now we don't use it right to the T, but 43,969 is that number. This suggests that we should at least go target the 47,029 level. That's that next horizontal trading range. And if folks were to take a copy of this chart, they would see that the price difference between each of those horizontal lines are the exact same number. Dollar-wise. So you've got that movement. So 47,029 looks like it's in the bag. I had mentioned in that last break that the typical Santa Claus rally actually begins towards the end of October.
Sure.
And this is the 127-year chart for the Dow, so we've got plenty of data to take a look at. And you can see where the Dow typically will go ahead and top out in the early August time frame, move lower in towards the end of October. This year, that bottom pattern that we took a look at inside the Dow, came right around November 1st, 2nd, something like that. So this is why I suggest that the real Santa Claus rally that people should be looking at that typically forms out there is the one that comes in October. I think the retail stores, I went to a wedding in October, kind of late October, and I was shopping for something. Don't go to the retail stores, the big malls too often out there. And when I walked in, I kind of figured that they didn't put out the Christmas stuff until after Thanksgiving. It wasn't even Halloween. right? And they were already showing us the Santa Claus rally. So the retail stores had it figured out that Santa arrived before Halloween out there. But this is the normal pattern that we would take a look at. And December is the second best performing month of the year out here over the last 127 years. Hey, the past doesn't equal the future, but oftentimes it certainly does. Now, what I thought I could do here is shift over to take a look at the Dow and see what its chart patterns look like when we have a Republican president. There's been 19 Republican presidents since they were founded in 1854. Now, my data only goes back to 1897, so I can't include all. I can include 13 of the presidential cycles out there, first-term cycles, and this is what that seasonal pattern would look like. Interesting. Now, you don't take this chart here and take a look at it from today going forward. Instead, what I'm providing people, and they want to take a snapshot of this would be as of come January 1st in 2025, so 4 weeks from now, 4 or 5 weeks from now. And this is the typical pattern of a first-term Republican president out there. Okay. If we take that same Republican first-year chart, but I exclude 1929, it looks like this. So if I'll go back and forth, this is with 1929 in it, this without 1929. It's not a substantial difference out here, but this is what we would typically look at. And here, we would take a look at the market basically moving higher into the early May timeframe and then moving lower all the way into the September timeframe. So this would be the typical seasonal cycle. This would show 12 terms because I've taken out the 1929 data on this chart. This is the average annual pattern during World War I. So, and I've got, oh, wait a minute, that's not this chart. Skip that. Sorry about that. When taking a look at, this was a presidential cycle. Well, here's what we can do, though. And I shared this, it might have been last week or the week before, or maybe it was during my show out here. Yeah. But this is the actual monthly chart. Since there's the potential of World War III, I thought we'd take a look at what took place during World War I, what took place during World War II. And so what I've done here is I've taken a look at, again, we're keeping this to a monthly time frame chart. And World War I began on July 29th, 1914, ended November 11th, 1918. We can see here this first red bar off to the left. That was when the war began. The Dow was closed for 5 months. When it opened, it traded lower for basically 2 weeks, and then it was off to the upside. And the off to the upside was because of global capital that was flowing to the U.S. And that's really what we took a look at when we're looking at how the Dow is trading today. The Dow is trading higher today in euros and a few other currencies out there. It just tells us that global capital is on the shores here inside of the U.S. If we take a look at, this was the actual, so this is a chart here that shows the years of World War II using the Season X data so we can see how the market actually traded. You can see here, on average over that time period, it wasn't like it was a market crash or anything. Well, why was that? The reason was because there were global capital flows coming here to the U.S. as well. Right. So on this monthly time frame over on the left, we've got when World War II actually started. We've got when Congress in 1941, after Pearl Harbor, the day after Pearl Harbor, declared war on Japan. That's when the U.S. got involved. And we can see here that in this case, what formed the actual bottom back in the 1942 timeframe was a completed A to B equals CD pattern. It was completed because of this bullish reversal candle, bullish engulfing, bull sash candle. And then what we see here is the rise in the Dow. And again, this was global capital flowing. Global capital likes to get its way. Well, first, global capital doesn't like taxes. Doesn't like geopolitical stuff, and it hates wars out there. It doesn't like its capital on the ground where boots are at. We didn't have, boots on the ground here other than Pearl Harbor, but there was really no boots on the ground, so to speak. So capital flew or came over through the large cap equities out here. And so that's a synopsis. If I were to summarize this, the first thing that I would say is that last month, on Friday, we negated a bunch of topping patterns on the monthly time frame chart. The Dow, the S&P, the NASDAQ 100, with the Russell hitting a resistance level. That bodes well for a future rally out there. Yep. And I would surmise that where the Dow is headed to is at least the 47,399 level. Now, folks, that is a monthly chart. There's going to be a lot of noise up and down during the way out here. But at least at this stage of the game, that's what my charts are communicating to us.
Fantastic. Steve, great insights as always. I love how you're able to pull things from kind of history and apply it to what we're going through today. Obviously, that is a great thing. We'll look forward to seeing you tomorrow, 11 a.m. Eastern time for your show, Trader's Edge.
Sounds great. Thanks, Jacob. Have a magical Monday.
You too, Steve. Thank you so much.